Hey there, howdy. My name's Dave. I am the Wall Street Cowboy. Thank you for stopping by. Today we're going to talk about a really great resource that's available to anyone. It's called finviz.com, and it is a great resource for finding some edge in the market, finding some really good opportunities, some stocks that may be rising or falling that you may want to add to your portfolio. So stick around. If you like what you see, hey, hit that subscribe button, tell your friends, come back often. Let us know what you think. All right, so if you're ready, I'm ready. Let's go ahead and get started. Thanks again for stopping by.
Alrighty then, let's go ahead and get started on how you can use FinViz, which is a great website with a fantastic platform that allows you to find some really great opportunities. The site is finviz.com, and this is the free version. They do have an elite version, which is a membership. You got to pay to have that. There are some features and bennies that you might want to have. I have a elite membership. I think it's worth it, but you certainly don't have to have it in order to make some really good trades and find some good stocks. But we'll get into that in just a little bit. So I'm just going to talk a little bit about FinViz. I can't possibly go through all the different elements of FinViz. It's very comprehensive, very detailed, but I'll try to hit some of the finer points that I use, and maybe if you do some research on it, you'll find some things that you like that I didn't even talk about. All right, so on this home page, they have a list of all kinds of stocks that have different reasons for taking a look at them. For example, these were the top losers of the day. These are the stocks that had the worst performance. Now, this one looks like it dropped from about $25 down to $5. Maybe you're bearish on the day and you're looking for some good bearish stocks. Well, here's a list to start with. You can also click on here and you'll get a whole list of stocks that fit this same criteria. Here's APRE, and if you scroll down, ART and ADXN and so on. So you can find a whole list of stocks. What's great about this is it doesn't matter whether you're a day trader or a swing trader or a long-term trader or investor. You can find some really good stocks. They have charts and all kinds of stuff. So you can find top gainers, stocks that just hit their new high, and unusual volume. Now that's a really good one, because if you're looking for a stock that is getting ready to move, usually it is preceded by some really big volume. Now, a lot of the institutions jump into it because they found out something, and then the retail traders usually pile on afterwards. But this is a good way to find some good stocks early on in the move. All right, so they also have all these different tabs on here. You can have news tabs, so you can find all the news articles that are pertinent to the indexes. You can get the screener or scanner. This is something we'll spend some time on today. This allows you to filter to find some really good stocks. There's some 7,000 stocks out there that's in the FinViz database. They would take forever to go through each one of those, so the screener allows you to narrow that down to just a handful that are going to fit the criteria of what you're looking for. They have the heat map, which is a bigger version of this thing right over here. And then they have groups, which are the different sectors. Now, sectors is something we're going to spend some time on today, and I like it a whole bunch. They have the different sectors of the market broken down into 11 different sectors. Everything from communication stocks to real estate stocks and energy stocks. There is one sector that is, I'm not going to say is missing, but it would be nice to have, and that's for the telecom. If you follow the Spiders ETF family, they have the same sectors ETFs, these same 11, but they also have telecom. Now, if you want to get to telecom, there is a way to do that, and I'll show you real quickly. You can reduce this down from the sectors to each one of the industries. And then you can get every industry, or you can ratchet it down or drill down to, say, communication services. Now, under communication services, you're going to find telecom. So it is there. You just have to do a little searching for it and you're going to find it. Now, not every telecom stock is going to be in this database. There are going to probably be some that are spread out across the other sectors, such as the retail sectors and the tech sectors and some others. So you might find a couple of stragglers out there in different sectors, but that's going to give you the bulk of them. And keep in mind that they are looking at a much larger database for communication services stocks than is in the sector ETF at Spiders. Spiders may only have 40 or 50 stocks in their ETF. The communication services could have 100 or more. So the percent that you're going to see out here, that for today, the communication services is up about 1%. It might be slightly different in the Spiders ETF for communications, the XLC. It might be slightly different, but it's going to ride pretty close to each other. Yeah, they're not going to be off by too very much. But every once in a while, you'll see a little bit different results here than you would if you're following the ETFs, and I'll show you that in a little bit. This does track it by 1 day performance. It also does 1 week and 1 month. Now, with this 1 week and 1 month, that's not a calendar week. In other words, it's not Monday through Friday. This is actually the last 5 trading days. So if you were to look at this on a Wednesday, it would include Tuesday's performance, Monday's performance, Friday of the previous week, Thursday, and maybe Wednesday of the previous week. So it's going to be the last 5 trading days. Same thing with the monthly. It's not going to be a calendar month. It's going to be the last 21 days, I believe. So if you're looking at it on the 15th of the month, you're probably going to get back close to the 15th of the previous month. It might be the 16th. It might be the 14th. It might be something similar to that. But it isn't going to be a true calendar month. It's going to be approximately 30 calendar days because there's approximately 21, I think 21 and a quarter trading days in every 30-day month. All right, so that's how that works. It's just going to be a little different from an ETF, but they're going to be very, very similar. All right, you can also set up portfolios, but I believe you have to have the Elite account in order to set up different portfolios, and that's a really big plus. You can look at insider trading, the CEOs and CFOs of the company and hedge funds and, larger institutions that are trading in a particular stock or sector. You can look at futures and Forex and all kinds of stuff. And they do have a back testing feature. It's not my favorite. There are a lot better back testing services out there, but we'll get into that in a minute. So, yeah, that's probably a good segue. Let's take a look at what the Elite service does offer. Okay, here's my Elite account right here. You can see that it says after market. The market's closed for today, and it gives you a little icon up here that tells you that. So that's going to be this first feature and benefit of having an Elite membership. And let me just be totally transparent and let you know right up front, I don't have any connection or affiliation with FinViz. I'm just showing you how you can use this site and platform. In fact, I pay them to be, for their Elite membership, but I don't get anything for this. I just want you to be a better trader. So I'll just show you what I've learned from it, and you can make up your own mind whether this is valuable to you or not. All right, so here's extended hours. In the free membership, you don't get this, and you also don't get real-time quotes. Now, that may or may not be important to you, but the delay is not that much. I think it's 5 or 10 minutes, not a big deal. But this extended hours, that can be huge. Because remember we saw on that front page where they had unusual volume. Well, you would sure like to see that in the pre-market, so you know at the open whether there's a particular stock that you want to look at that has unusual volume. So that's what this does for you, and that feature alone is probably worth the $25. You could probably make double or triple or quadruple that on one trade just by having that little feature right there. There's also some advanced charts and advanced technical indicators. Again, this is not the best source for technical analysis. There are probably better platforms out there, but it's not bad, and it's nice to have as a backup in case your platform is under maintenance or isn't operating right for the day, or maybe to look as a backup or a second set of eyes on a technical indicator. So they do have that here. This back test is something, again, I don't use. There's a finite number of indicators that you can use for your back testing, and I don't believe it's customizable. I don't think you can change a whole lot of that or add in a bunch of different technical analysis that you might use. So there's probably better back testers, but it's not bad if you don't have anything at all. At least you got something. Now, correlations is something you may or may not use. I don't think I would have paid for the Elite service just to get this, but it is a nice go along. It'll give you up here what stocks are correlated or inversely correlated. Now, how is that important? Again, this may not be important to you, but for me, I do a lot of pairs trading. It's my way of hedging. So let's say that I want to take a position in Apple, but what happens if I buy 100 shares of Apple and 10 minutes later it's $1 lower than it was when I got in? You know, how often does that happen to us? Well, I like to do a pairs trade. So I might be long Apple, but what do I want to be short? Well, if I get a correlated stock, let's say, and I don't know if it is or not, but let's say that Google is highly correlated. In other words, when Apple's up, Google's up generally, and when Apple's down, Google's down generally. Well, if I take a long position in Apple and a short position in Google, then if I'm wrong on my directional bias for Apple, there's a good chance that I'm going to be losing money on Apple. But if I am short Google, which tends to go down when Apple goes down, I'm going to be making some of that back on Google. Now, I don't expect to make back all of it, and maybe it's not 100 shares to 100 shares. Maybe it's a different ratio, but I can take a pairs trade, and then as my trade begins to work out, let's say that I believe Apple is going up $4 on the day. Once I've made 50 cents on that, maybe I add in a second 100 shares of Apple, but I keep my short in Google, and so now my ratio is getting more favorable to my directional bias in Apple. All right, so that's what correlation allows you to do. Another thing you can do is the inverse. Let's say that Apple is inversely correlated with utility stocks. In other words, Apple is risk on, utility stocks is risk off. You could take a pairs trade, buying 100 shares of Apple and shorting 100 shares of XYZ utility. Well, if you're right, there's a really good chance that both of those are going to pay off. Your utilities are going to go down and Apple's going to go up. But what if you're wrong? What if Apple starts to go down and you're long? What do you think is going to happen with utilities? Well, they're probably going to go up. Money's probably flowing out of a stock like Apple and into a stock like a utility. You know, risk on is Apple, risk off is utilities. All right, so it can work to be a good thing to have an inverse correlated pair, or it could work against you. Just depends on how aggressive you are. But again, that information is right here. I don't have to go searching for it, and it saves me a lot of time. So that's available. This is one of the other things that I really like about the Elite service. It allows me to do an export to Excel. So I can take all this information here, export it to Excel, and then I have it forever and for always. Now, if you have the free version, I don't believe that you get this export. So I suspect that you'd either have to take a screenshot or maybe manually take the information. I don't know how you would get this information, but it'd be a whole lot more cumbersome than just doing a real quick export. So that feature, along with the fact that I have pre-market information, extended hours, those two things are definitely worth the price of admission. There is one other thing that I like about the Elite service, and that's alerts. Many times people come to me and say, hey, Dave, how do I get alerts on news for a particular stock? My platform doesn't give me alerts on news. How do I get that? How could I scan for stocks that have news and that are in my watch list? Well, you can set up this alert and have it send you an email when one of the stocks in one of your portfolios. Now, I believe you have unlimited portfolios. You can set up as many as you want, and they can be as diversified as you want. Maybe you've got emerging stocks in one portfolio, and in a second portfolio, it's utility stocks or tech stocks or whatever. You can set up as many different portfolios as you like, and then set up news alerts on any or all of those if you like. So it's a really nice feature to be able to have your email up and get a signal that, hey, something's going on with XYZ company, and you're alerted to that right away. So again, those are the three things that I really like about the Elite service. These other things are, they're nice to have, but I don't use them too much. The customization and, this company offers or stuff. But, that may or may not excite you. It doesn't do a whole lot for me. All right, so let's go to the screener, and I'm going to show you how I use that to find some really good opportunities. Alrighty then, so on the screener or scanner page, they have a whole bunch of information. Again, it's way too comprehensive for me to go through each and every one of them, but I'm going to give you an overview of what I use. Now, the database, as it is right now today, has 7,550 different stocks that FinViz has information on. Now, that's a whole lot of stocks. That's probably not as many as there are. I think there's some 15,000 that there could be information on, but that's still a pretty big stable of stocks, and it would be hard to find the one or two that you want to trade today or this week or this month. So let's narrow that down. Now you can use this descriptive header, you can use fundamentals, you can use technical, or you can look at all of them together. So descriptive will tell you, what sector is it in, and maybe you want to look at a particular sector, maybe you want to look at a particular price range, or what have you. Then you could also look at fundamentals. Maybe you want PE ratios or price to book value to be a certain level, or their debt to equity ratios. So you can look at the fundamentals and say, well, I'm a long-term investor and I only want stocks that have a positive price to earnings growth level. All right. So this allows you to find those pretty quickly. Another thing that it has is technical analysis, so like moving averages, 50-day moving average, or a chart pattern, or maybe a candlestick. Maybe you only like dojis or shooting stars or whatever. This allows you to go find stocks, gapping stocks. That's a really great tool for finding good stocks. All right, so I'm going to come back here to descriptive. Remember, there's 7,550 stocks out there. I like to narrow this down or filter out stocks I'm not interested in. Now, I like U.S. stocks because they have good oversight. Their quarterly reports are pretty reliable. I think they're real reliable, in fact. But maybe not so much for the Asian stocks. I'm not I just don't feel as confident with the foreign stock exchanges to make sure that they're reporting information correctly. And maybe, I don't know, maybe you like Brazilian stocks and you're like, oh, that's up and coming emerging markets, and I just want to look for Brazilian stocks that are available. Well, here's an opportunity for you. You can narrow that search down to just those that are Brazilian stocks. I like U.S. stocks, so I'm going to click on that. I also like to have stocks that are optionable. Now, I do have the option of coming down here and say I want them optionable and shortable, but I don't usually choose that, and I'll tell you why. Let's take the ETF, I don't know, the real estate ETF from the spiders. That may or may not be shortable. I think right now it's hard to borrow the XLRE, the real estate ETF. And it may be the same on telecom because it's a fairly new ETF. And there just may not be enough holdings out there at different brokerages to be able to allow that to be shortable. Well, I may not be looking to go short an XLRE, but I would be looking to go long. Well, if I say it has to be shortable, perhaps that I have that security excluded, and I really would have wanted it on my list because I never intended to go short. All right, so at any rate, just go ahead and do it how you feel most comfortable. I just like optionable. I don't care so much about whether it's shortable or not. All right, the next section is price. Now, I realize that there are all kinds of traders and investors out there, and there's a lot of us that really like stocks that are low priced, under $15 or under $10. This allows you to sort out anything that's above that price. Now, I'm just the opposite. I only like stocks that are above $15 a share. I don't really like the low price stocks, so I'll set this filter so that it accommodates that. Now you can come down here and do a custom. Maybe you like stocks that are above $40 but below $500. Well, you can set that up that way. So however you like to find stocks, whatever in your wheelhouse, you can set it up that way. So I like stocks that are over 15. Now, I also like stocks that are really, really liquid. So I'm looking at average volume. I want them to have an average volume of over 1 million shares per day. Now, that excludes a lot of really good stocks, but I also want to make sure that anything I'm in's got great liquidity. I can get in, I can get out. I'm not going to be worried about being caught in a very thinly traded stock. So that is real important to me. Now, you can narrow down this drastically. You can see now I only have 928 out of 7,500. I have narrowed that down quite a bit. I could say I just want stocks that are in the S&P 500. They do have the Dow Jones, and I wish they had more choices like the Russell or something else. Maybe the NASDAQ or whatever. But this is all that they offer, even with the Elite service. So if you wanted to, you could narrow it down to just the biggest companies in America simply by doing that. But this so far has given me a really good list of stocks, only 1,000 that I have to look through to find some really good opportunities. Now, I want to know what kind of stocks. In other words, what sector do I want to be in? Well, they have that here. I can look at any one of those 11 sectors we talked about, or I can make it a custom. I could say I just want to look at the technology sector and the communication sectors. So I have that ability to narrow that down accordingly. And I'll show you how I do that in just a moment. So let's say that I want to know what sector I want to be looking at today. Well, up here under that groups where they have the different sectors, they have the 1 day, they have the 1 week, and the 1 month. I like looking at the 1 month performance. That tells me that there's consistent price movement in a particular direction. So technology has been consistently rising over the last 4 weeks. much better than, say, real estate, which is pretty pedestrian at 1% over the last month. So I could look at the 1 week, and I do, but initially I look at the 1 month relative performance. Now, there is a way to be able to set this up to look at the ETFs in your favorite family of ETFs. So I like the Spiders ETF. So this is where that export becomes very, very important. Again, you don't have to do that. You could do it manually, just the way I just did right here, and just say, well, it's technology, and technology was strong for the last week, so boom shakalaka, that's all I need. It's technology. But I'll show you how I do it, and it's going to come up with a little bit different information. So I have a spreadsheet. You don't have to be an Excel guru to do this, but you should have some familiarity with Excel, because there are some formulas here. If you need any help with that, shoot me an email or something, and I'll help you with that, or I'll send you over a blank palette and you can work from it. But I'll show you what I do. Now, I have the different ETFs that are in the Spiders, so for the different sectors. So this is the telecom ETF. This is the tech ETF. This is the healthcare ETF. So I have them all. I also have the Spiders in there, the SPIs, because I want to have a benchmark. This is never going to be at the top or the bottom. There's always going to be sectors that outperform the S&P, and there's always going to be some that underperform. So this gives me a benchmark as to whether a sector is performing, market performing, or underperforming. All right, so I have this sorted 1 through 13, which includes the S&P SPY, and that's by month. So if you look up here, I have the export from the scanner, and I'll show you this in just a minute. I have the performance for the last week. Again, that's the last 5 days, trading days, not necessarily the last calendar week. The last 21 or calendar day, or 21 trading days, or the last month, the last quarter, last 6 month, last year, year to date, and it also has the weekly historical volatility, the monthly historical volatility. That's real important, because this is what I use to find my price target. And I'll show you that in a minute. All right, this also has the average volume, the relative volume. Now, I don't really use this all that much. In fact, that isn't relative volume. Let me come back down here. What this is, I've changed my sorting. This is the average volume, and then that's the price. I have taken out the relative volume and the percent change, because the relative volume is only 1 day's worth of information, and the percent change is 1 day information. In other words, what was the relative volume today relative to its average volume? Well, I really don't care what it did today or Friday or Thursday or Wednesday or whatever day it was that I took this information, and I don't really care what the percent change was on that particular day. So I have excluded that information. So I have the average volume and the price, and then I've gotten rid of all this other gobbledygook. All right, so I also have this sorted by week. So let me get right back down here. This is week 51, and it is sorted. Number 1 for the last month has been energy, at least in week 51. That was the best performing of all sectors for the last 21 trading days. The number 2 was telecom. The number 3 was technology. The number 4 was communications. Okay, so on and so forth. This out here is the weekly rank. So while energy was the best performing for the month, you can see here it was the worst performing for the week. That should tell you that energy topped out. It's already started to decline. It went from being number 1 to being number 13. That's the thing about energy and basic materials. They can be big movers. They can swing from one end to the other. So telecom has last week was the number 1 performing for the week and the number 2 for the month. Technology was the number 2 for the week and the number 3 for the month. So you can see where telecom and technology and even communications were the best ones to be in. Now, where's basic material? It's way down here. It's number 4 and number 7 for the week. Well, week 52, number 1 was again telecom. So where should I have been putting my money in week 51? I should have been looking for stocks in the telecom sector. And I knew that because it had taken over the number 1 spot, or at least that it moved up towards the top, and energy was starting to wane a little bit. So I got telecom up here. I also have tech up here. Well, I should have known that because the previous week technology was in the top 3 or 4. Same thing with communication. Well, communications number 4 for, looks like this got out of whack here. This should be 4 and that should be 5. I don't know how that happened. But this that needs to be, this tells me that communication is one of the sectors that I should be looking at, as opposed to energy or utilities or real estate, which is down here near the bottom, not only for the last week, but for the last month. So maybe I'm bearish on the stock, on the market. Here is the sectors that I would want to go find the worst performing stocks in the worst performing sector. Do you see how powerful having that export is, and why it's worth it to me to pay whatever it is, $25 to have that? It's very, very important. All right, so this I now break out into a by sector, and I have a list of stocks, usually the stocks that are in the ETF, but it doesn't have to be just ETF. It's just stocks that are in the telecom and stocks that are in the tech sector, stocks that are in the healthcare sector, that sort of thing. So I keep track of that. I'll show you where I put that. So I'm going to scroll all the way up to the top. I'm going to scroll all the way out here to the end of my spreadsheet. All right, here's week 52. Let's go back to week 51. And let's take a look and see how well this did. One more thing. Week 51. This is an alphabetical listing of all the stocks that I have sorted in my spreadsheet, or my portfolio, if you will, for basic materials. And then this is the ranking. This was the best performing. This was the second best performing. This was the third best performing. This is the fourth best performing, based on the monthly performance, right? So CMC was the worst performing over the last month. Maybe not for the last week, but for the last month in the basic materials. So where did I get that? I'm going to grab this alphabetical listing. I'm going to copy it. I'm going to go back to FinViz. I'm going to paste that in there, and I'm going to hit enter. Now, you don't have to put commas in there. It does it for you. You just have to take it right out of Excel and drop it in there. It figures it out. It's pretty cool. All right, so now I have all those stocks in alphabetical order that are in my basic materials sector. Mine, not necessarily the ETF, the spiders, although this list pretty closely resembles that. I just like to make sure I have a good representation and that they aren't, $2 stocks and stuff. So some minor changes. All right, now you can get an overview of this from FinViz. It's what's the name of the company, what sector is it in, what is the industry, yada, yada, yada. Well, you can also look at the valuation and the financials. You can look at who owns the stock, what hedge funds and institutions. You get performance, which we're going to come back to that. You can look at the technical analysis. How has these stocks done in relationship to their moving averages or things like that. All right. You can do a custom. You can look at the charts and so on and so forth. So I like this performance back here. I'm going to click on performance. Now, remember that spreadsheet, I had the ticker, I had the previous week, the previous month, the previous quarter. Look familiar? All right. So what I do is I sort this. Now, if you hit this button once, it's going to sort worst to the best. In other words, the worst performing stock is that for the month is on top. The best performing is on bottom. I don't know why FinViz does it that way, but it's how they do it. So I'm going to hit this a second time, and that's going to put the best one on top. So I got MP, ESI, Livent, and then US Steel right here. Those are the top stocks. And I can come right down here, and I can hit export. And now I have an Excel spreadsheet with all that information. So I can take that information right here, and I can grab this header if I want, or I can exclude it. And I come out here and I grab this information. Remember, I told you I don't keep this percent change of the volume. I have everything else in there. The price, the relative volume, the average volume, all that, yada yada stuff. All right, and I just grab that, hit copy, come back to my spreadsheet. I'm just going to go ahead and get rid of this and say, yes, I want to keep this information on my clipboard. And then I come out to the next week. Let's say that this is week, well, it wouldn't be 53, right? Because there's only 52 weeks in the year. It'd be week 1, 2021. And I just, copy and paste right here. Let's come down and hit paste. Okay. Now I have that information. So that's how I do it. And I'll show you how that helps me with finding really, really good stocks. So this is week 51. Here it is, week 51. MP, X, US Steel, ESI, MOS, and OLN. Those were the best basic materials. Well, how did they do the next week? Well, I have it listed right over here. It looks like MP, who had been the #1 performer the week before, continued its strong performance, up another 8% that week. See how easy it was to find that? That was a great opportunity. Now, I don't know that I would have done basic materials, but it doesn't matter. You can do the best of the sector you like the best. So I'm just showing you how I look for it. Well, here's US Steel was down 9%. ESI was up 2%. MOS was, let's see, it's probably down, I think. Oh yeah, down here, down 5%. And OLN was up 1%. So 3 out of 5 of those were up. So let's take a look at a couple of these other sectors. All right, so 3 out of 5 isn't bad. In fact, that's really good. Let's take a look at communications. In week 51, MGNI was up 63%. Fubo, or Football Network, I think that's the soccer network, fairly new, up 25%. Car Guru, pedestrian, not up quite 1%. Now this is as of the end of the week. It very easily could have been even higher than that. The high of the week might have been 3%. But by the end of the week, it was profitable. So you could have pick this up, and if it was up 3%, and that was your target, and I'll show you how I get my target, but you could have capitalized on that. How about Roku? Roku's up 8%. How about Groupon? Groupon was down 4. So out of the top 5, only 1 was down, the other 4 was up. In basic materials, which was not one of the sectors that I would have been looking at, 3 out of 5 was up. Do you see how I am finding better than average edge? Let's take a look at, I don't know, look at tech. Well, financials, there, that's a good one. PayPal, number 1, up 1.3% the next week. Franklin Funds, down 1.4. Wells Fargo, let's see, Wells Fargo is here, up 1.26%. Citibank, up 1%. ICE Exchange, looks like it was basically flat. So I had 3 up, 1 down, 1 flat. Do you see how staying with the best of the best helps you to find good stocks that are going up over time? So if it's a day trade, if it's a swing trade, if it's a longer term trade, these are the ones you're going to want to be in. So I'm going to take just a moment and I'm going to talk about edge, and then I'm going to wrap this up. I live in the town of Las Vegas, and this is not to talk about Las Vegas and gambling and all that stuff, but I want you to understand edge. Now, in Las Vegas, we've got all kinds of top entertainment. Don and Marie, where I think they just left the Flamingo here not too long ago. I think this was their last year. But, top name entertainment out here, Celine Dion and such. How do they pay for that? How do they pay for those beautiful water shows at the Bellagio and Treasure Island? How do they pay for that? How do they pay for these beautiful restaurants? Hell's Kitchen and, all these other really great restaurants, Lowry's and stuff. How do they pay for all that stuff? It's through gambling profits. Now, they have what's called edge. I'm going to talk real quickly about one of the casino games, blackjack. There are others, and they have better edge for the house. But the one that has almost parity with for you and I and the house is blackjack. You can get as close to a 50-50 win-loss as possible with blackjack. Now, there's a strategy called a basic strategy. Not everybody plays it, but let's assume that everybody in the world plays basic strategy. The edge for the house is about 52%, which means 52% of the time they're going to win. 48% of the time, we're going to win. That is edge. Now, it doesn't sound like a lot because it's only a few percentage points. But multiply that by 1,000 hands. Well, that means that they won 520 hands. You and I won 480. Well, now we're starting to get a little bit of separation. They're making more money than we are. Well, now let's do that by 6 players. What is that? I think it's 3,120. Is that my math right? 3,120 times they win. We win the balance out of 6 players times 1,000 hands or 6,000 hands. They would win 3,100 times. What if they have 10 blackjack tables? Well, now they're winning 31,000 times, and we're winning whatever that is, 28,000 times. See, they don't care if you win. They really don't, because they know the numbers are going to work out. They don't care as long as you're playing. They don't care. Now, there are things as leverage and ways of increasing your bet that can skew this. Counting cards, and counting cards is just way too hard for me, but you can actually skew that so that you have a little bit better edge than the house does. But for the most part, 52 to 48, that's what it's going to work out. And they can build these great casinos and pay for this headline entertainment. All right, enough about blackjack. Edge is the key. Do you have edge? Well, I just showed you three random sectors. I picked just the random top 5. I didn't even go through and look at the charts or look at, maybe we had a one-hit wonder where, this PayPal was up 10% and that represents 50% of a whole month. In other words, they did half of what they did in a whole month in 1 week. It should be closer to a quarter because there's 4 weeks in a month. So this should have been somewhere closer to maybe 6%. But they had a spectacular week last week. Now maybe that's a sign of a breakout. I don't know. But I haven't even gone to the trouble of looking at that. All I know is that it's performing well this week, this month, this quarter, this half year. Do you see where I can cherry pick the best of the best? I can see that ICE Exchange was up 3%. It was up 13%. That's about one quarter of that. And then it was up 13% for the quarter. So it just means that they're pretty pedestrian from this quarter compared to this month compared to the whole quarter. Up 19% for the half a year. Maybe that's good, maybe it's not. Look at the Discover cards. Up 3% for the week, up 13% for the month. That's about one quarter, so that's good. 56% for the quarter. That's a little better. That's underperforming. For the last 3 months, that's not quite a third, but it's close. And then for the half year, they're up 60%. This might be a better choice than maybe Wells Fargo, because Wells Fargo had a down week, and maybe that's indicative of the fact that they're pulling back. So I can do a little research. I'm just talking about random, willy-nilly looking at the top 5. And I had edge. I had 3 out of 5. I had 4 out of 5. I think the tech, it will be pretty much the same. Western Digital looks like it was down 6%. FT&T was up 9%. 1 for 1, or 1 out of 2. Autodesk up 1%. 2 out of 3. HP pretty pedestrian. 2 out of 3 and a tie. Cadence up 5%. 3 out of 5 and 1 tie. That is edge. FinViz gave me that information. And again, that's no technical analysis, no nothing. Just took me, 5 minutes? I go in there, I look at the sectors, I choose what sectors, I look at the best performing stocks in that sector. I can reduce that list by filtering. It only takes a few minutes to come up with the best stocks, that are above $15 and that are U.S. stocks. You know what I'm talking about here. So that is a way for you to find really good stocks for day trading. Maybe you just look at the 1 week performance rather than the 1 month. I like a swing trade. So swing trading. Maybe you want to look at something that's longer term. Maybe you want to look out here, how is it done for the year? Here's 89%. Cadence beats them all. Maybe that's the one you want to look at because this has got pretty consistent growth over all time frames. Now, I'm going to show you one last thing that I do, and then I'm going to let you go. All right, so out here, I'm going to go to the top. Okay. There's the price as of Friday, or in this case it was Thursday because Christmas was on Friday and the market was closed. So that's Thursday's close, the day before Christmas, for MP. So how do I know what is a good price for MP? Now, this is something you can do on a calculator, or if you know a little bit about Excel, you can put this in. So I'm going to click here. I'm going to say, I want that. So I'm going to hit equals. Oh, you know what? Take that back. I'm going to click here. I'm going to hit equals. And you don't have to do this, but I do. Open paren. That price times the monthly. Now, I understand that weekly you may want to do that. I do the monthly because it's usually the bigger of the two numbers. It doesn't always work out that way. There'll be some times on here where it's not, where this number, the weekly volatility is higher than the monthly. Here's one right here for MDU. I think that is, it was 2.44 for the week and 2.1 for the month. It's usually the bigger volatility is for the monthly, not always. All right, so that's it. I'm going to close the paren, and now I have a price, $3.90. That's my target. That is how much I think this stock can move over the next 30 days, but I'm probably only going to hold it a week. So even though it's a monthly volatility, I am only expecting to hold this for a week. I'm expecting it to hit that monthly volatility, and it's relatively close anyhow. But I'm expecting it to hit that volatility in 1 week. So now I come here, pretty much the same, equals, open paren, the price on Thursday plus the expected move. Close paren. Pretty simple. That is my target price. Pretty simple. You can do this that quick, and then I can just take this, highlight those, grab it, whoops, right there, drag it down. Now I have my target price for every one of these stocks. So I can real quickly come up with what is my target price, and I can do the same thing for my stop, right? Because I'm going to risk one to make one. So I can come over here and say equals this price minus, instead of plus, this. Close paren, boom. So that's my stop loss. That's my target price. And I want to try and get in. Now, I usually try and get in the last half hour of trading. I try and do all this in the last, 30 minutes, 15 minutes of trading. And then usually I'm not looking at 11 different sectors. I've got 1 or 2 that I'm looking at. So it only takes me a couple of minutes to download this information. And then that's where I want to try and get in, is pretty close to 35.50. And I know that my target is 39.41. So as soon as I get filled, I put in a good till cancel order to get me out somewhere around 39.41. I probably would put it in at, say, 39.25. I just want to get the bulk of that. I would hate for it to get up to 39.39 and then turn around and I'm at 39.41. So I try not to get all of that volatility, but I try and get most of it. At any rate, that's how I do it, and there's my stop loss. How easy was that? So FinViz is a great tool. Excel is a good complement to that. You can sort this by sector instead of having all these in here. What was that? The basic material sector, I think. We're going to come up with a pretty close composite. We're going to go basic materials. Here, MP's on top again. ESI. Oh, no. I guess it didn't take that out. All right. So basic materials here. MP is near the top. Oh, we don't have, yeah, we do have it sorted. And then we can filter out stocks that are, we want to be over $15. So now I only have 18. I want them to be 118. Pardon me. I want them to be U.S. stocks. That dropped it down to 90. And then I want the average volume to be over 1 million shares. Do you see I'm getting the same basic list? And you can do that. It only took me a few seconds, right? Just a few seconds. So that's how you use FinViz. Hopefully this has been educational. There's a whole lot more to this, and one of these days I'll show you how I use this spreadsheet to do even more, and how I track these top 5. I have a pretty sweet spreadsheet for that keeps track of all 5 of these per week. So I have that one, and then I'll have week 52, and I'll have this list, and I'll keep track of that, and I can quickly go back, I mean in a matter of a second, and I can tell you how many times MP has been in the top 5 spots. So I can see if it's just a 1 week wonder, if it's consistently in the top of its sector, leading its sector. So at any rate, I'll show you that another time. So again, hope this was helpful, and as always, good trades.